Good morning, everyone. Good morning from Los Angeles. Welcome to Trading with Sergio. How's it going? A lot of earnings, a lot of big moves in stocks. We'll talk about those. I also want to talk a little bit about crypto, obviously. It looks like the retest of 60,000 in Bitcoin is around the corner and 1,800 on Ethereum. And what's going to happen to the proxies, right? MicroStrategy or strategy and BMNR, Tom Lee, Michael Saylor, all that good stuff. So welcome to Trading with Sergio every Monday and Wednesday, 10 a.m. Pacific, 1 p.m. Eastern. And on Fridays, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. I'm going to do this for the rest of the quarter. We'll see where we get to. And after that, we'll make a decision on to continue the live streams 3 times a week. It's probably a little too much with the rest of my schedule that's going on because I think I'm going to be pretty busy the second quarter with many other things that I'm trying to do. Yeah, what happened? Well, there are a lot of stocks that is talked about in the media and in the trader circles, such as Robinhood, such as HIMS, and such as, a lot of these AI data center power generators. And it seems like a lot of people are just stuck on the same stocks, or Palantir, or NVIDIA, or, the Mag 7, obviously. Look, um, obviously, you can choose to do what you want to do with, with these stocks. But one thing that I try to explain to my members group is trend is your friend. When the trend is down, short term, because we're trading, right? It's mostly short term. You have to be aware of what you're dealing with. And on some of these stocks, the trend has been down for a while, but the scope and size of the move is pretty wide, right? Okay, for example, let's take Hood. Yesterday, earnings came out. They were okay. It seems like a lot of people actually blew their accounts on Hood because the a lot of it did look like it. First time actually since 2023 their AUC came down, which is a pretty decent indicator that a lot of people blew their accounts on this pullback. When I'm talking about pullback, by the way, we're down like less than 1-2% from all-time highs on SPX. I don't know how people blow accounts with the, but then if you're not dealing with indexes and you're just dealing with the underlyings. And if you're into Hood and the Hood goes from 155 to 75, you could easily blow your account. But the goal is to understand that in trading, it's like a broken clock. You can't keep going back to the same well too many times. And is Hood a generational wealth creator? Possibly, but I mean, I wouldn't put that in my long-term port. However, if you're a long-term investor, you have to endure these moves, 50% moves with these stocks. That's what they do. They move 50%, 60%, in some cases more, 80%. But what I'm questioning is that aren't there any other companies in the United States that are doing really well, that are in their growth phases? There are. So I don't get the point of people just, for example, you can go on social media and all you see is Hood, Robinhood today. Isn't there another stock that you guys can just invest in? Is Robinhood, is that the market? No. The goal is to find these stocks, and there are many ways to do it. You can have scanners and you can do whatever you want to do. But I'm more interested in trading, a cycle or two out when it comes to options. And unless you're bearish or short or have puts on stocks like Oracle and Hims and Hood and Netflix now, which I'm actually trying to buy in my long-term port, that are down 40-50%. Find some other stocks. There's many. There's literally thousands of stocks that we all can trade, and they're pretty liquid. I'm not talking about, the pump and dump and meme stocks and things like that. Substantial companies with decent earnings. What has been happening is that, though, it seems like there is definitely a PE contraction coming down. And Hood is a perfect example of a stock leading its earnings growth phase and now leading again its earnings kind of flattening and repricing, right? Hood is definitely getting repriced. Why is it getting repriced? Well, it was very expensive fundamentally at 155 and by any metric possible. Still expensive at 75, but much less expensive. And then, but when Wall Street, when you have to understand, when you're dealing with these high growth and high PE names, when Wall Street decides to, it's not a punishment. I mean, the Hood is still up. I think if you look from last year's, start, I think Hood is still up 100% probably, or at least from its low in April, last April, right? It was $30. Now we're at 75, over 100%. That's a good return. Obviously, it's a great return. But then talk about the people who when it was on its way from 30 to 155, all the people who bought it, pretty much all of those people have losses. Now, when Wall Street decides to compress PEs, when Wall Street decides to reprice stocks according to the fundamentals that it sees, you can't fight that. That's going to happen, like it or not. These stocks are not being bought and sold by YOLOers on Robinhood or Webull or whatever. This is massive, massive institutional money going in and out of these things. And the earnings report was okay, but then the repricing continues, right? It seems like there's almost like a direct correlation now between Robinhood and crypto, especially Bitcoin and Ethereum. It seems like every time Bitcoin and Ethereum goes down, Hood is selling off. Why? Because 20% of their business and major growth engine for them was crypto trading. Well, if you look at the earnings closely, that was the only declining part of the earnings report, right? So obviously people blew some accounts or whatever they did. But this is not just about Hood. This is also valid for Palantir, another major, major name in the circles of so-called gurus, right? And another one is NVIDIA. Another one is SoFi, right? All these, the same stocks. They all talk about the same stocks. They talk about HIMS. Like if you go on X today, every other post is about HIMS. Is it cheap at 17? I don't know. I wouldn't look at it with your money. But then, that's why we have markets. I try to find stocks that are going to work for me, even on a down market. And it's not that hard to do, but then you have to do the work. Expecting somebody to give you a fish all the time. And there are these influencers, and should you listen to them? I don't know. Take at your own risk. Do what you want to do. So my goal is to find these gems, and it's not too hard. Again, as I said, you can create scanners and then set up your parameters and find these stocks. But, for every Hood, there's 10 other stocks that are making 52-week all-time highs. On our all-time highs, 52-week highs. Why? Because their earnings are there. They're growing. So if you're going to tag along a stock, let's say, on its way from 10 to 30, okay, it's going to take a year, let's say. By the way, stocks don't go to 10 to 30 straight. What they do is they go up, they consolidate, earnings catch up. Fundamentals are still important. A lot of people don't think fundamentals are important. No, fundamentals are important because especially if you get a haircut on valuation and your stock gets cut in half and now you're still holding the bag, you just go, what's going on? That's exactly what's going on. You caught the stock in its growth phase, you didn't take the profit, and now you're going to suffer the consequence. Will there be another growth phase in all these stocks? Possibly. But until that happens, I'm not going to touch them. My goal is to just make sure that if a stock is going to trend, trend is your friend, right? If a stock is going to go from 10 to 30, I'm not going to be brave enough to say I bought the low, sold the high, because there are a lot of fools out there who do that, and I'm not one of those people. I'm realistic. My expectations are realistic. But if I can grab the middle part of that big move, 10 to 30 is a pretty big move, right? And it's still hypothetical, but there are a lot of stocks that are doing more than that. So if I can jump on that train at 15 and ride it to 25, that's still 70%. I don't have to get the top at 30. I don't have to get the bottom at 10. So what I'm trying to say is a fun day, find a trend, and just tag along. If you're trading, right? So it's not going to go straight from 10 to 20, 15 to 25. It's going to go 15 to 20, correct, consolidate, then 18 to 23, and correct, consolidate, and 23 to 28. So there is these breaks in between on the way up. And the reason for that is fundamentals. Stock goes up, price-wise, fundamentals catch up. When Hood's earnings were, Hood was beating earnings, Robinhood, right? What was happening? Stock would go up, it'll consolidate, earnings would catch up, another leg up. Earnings would catch up, another leg up. Now, it's getting repriced, and then now earnings are kind of iffy. And although the numbers were okay, the revenue was less than expected because they got a massive hit on crypto. So I'm just baffled by a lot of folks, though, that they just keep sticking with the same 10 stocks. So I'll do a little bit of chart analysis today. Look, I can do that as well as anyone. If anybody wants to come on, by the way, let me post the link. I would love one of those ex-gurus one of these days to show up, because they just make everything look so simple. They go, I sell puts. How are your cash secure puts on Hood are doing, I wonder? Or on Palantir, or, whatever else. Anyway, so good morning, Mike. Good morning. AAP still running? I guess so. Okay. Good morning, Luis. Finally caught me. I'm listening because I'm interested. Well, I'm glad you are interested, and I'm glad you're listening. Good morning, Manny P. What are we doing? Let's go to some charts, and let's take a look at what's going on. Okay. You guys can see this, I'm pretty sure. Yeah, market's kind of sold. Actually, this morning's employment numbers or unemployment numbers or jobs numbers were pretty good, and then market sells off pretty hard, and then everybody's saying, why are we selling off? I'm like, well, that's called distribution, man. When a stock is being sold on good news, it's called distribution. When a stock is being bought on bad news, that means accumulation. And once you understand that, why your stocks are reacting opposite direction of the news that's out there, then maybe we can live. So this is the SPY, still grinding higher. There's a reason for this, by the way. SPX, or S&P 500, is a market cap weighted index, and 7 to 10 stocks are making up 80% of this index. But then there are, 490 stocks make up the rest. Well, if 10 stocks are making up, and we know which ones they are, the Mag 7 and Tesla and, NVIDIA and Apple and Google and Meta and Microsoft. So we can look at those and we understand why the indexes cannot make new highs yet, is because, let's start with alphabetical. Let's go Apple. Okay. Apple hasn't made a 52-week high. It bounced off its 200 EMA, so its contribution is not that much. NVIDIA is the same price as it was literally 6 months ago, right there. If you look at NVIDIA July 21st, or first week of August, it's literally the same exact price as it was then. That's why the indexes are kind of grinding higher and cannot make highs. Another one is Amazon. Okay, breaking down, actually. That's why, by the way, QQQ, which these stocks are part of, is not as close to its all-time high as the SPX is, because that's more concentrated index of 100 names, and it's pretty obvious why this is all happening. Another one is Microsoft. Look at that. They're all in downtrends. Actually, the indexes are holding up extremely well, because what's happening is that the 490 stocks that make up the rest of the index are doing better. And an example of that is IWM, which is a much larger index, but smaller caps, called Russell 2000. Look at the difference in Russell 2000 and look at SPY. Look how different it is. In fact, I put out a video about a year ago that I said IWM, which is Russell 2000's ETF, is going to outperform SPY. And because SPY or SPX had outperformed, large caps had outperformed small caps for 3-4 years. And at some point, that's going to change. Well, sure enough, that's changing. And look at the difference, right? And then another one is Meta. None of these stocks are 52-week highs. If these don't make 52-week highs, indexes are not going to make 52-week highs, especially Triple Q and especially SPX. Another one is Netflix, which I'm trying to actually buy or get assigned, and hopefully I will at the end of this cycle, February 20th, as I'm short the 88 puts and the 85 puts. It'll be the 5th stock in my long-term port. Another one is Tesla, obviously, right? It's just bouncing off or bouncing around. So when these Mag 10 stocks don't make new highs, indexes are not going to follow. So these are the generals, okay? If the generals are not going anywhere, indexes are not going to go anywhere. So, so let's take a look at some of the names of the day. Here's Robinhood. Stock is 75. It's retesting last week's low. Okay, it's in a clear downtrend. And it all started with no news, right? But then stocks have a way of doing that. And on its way up, yeah, I was correct. It was 30 in April. It went from 30 to 154. But it did take a leg up. Earnings caught up right here. Take another leg up, consolidate. Earnings caught up. Another leg up, consolidate. Except that after the last earnings report, previous to this one yesterday, stock started selling off on the earnings report. Now, that's called distribution, folks. It sold off, it bounced, never made another 52-week high, and then it rolled over. Well, this has to play itself out now. This is not going to be a V-bottom like everybody wants it to be. Where would I be interested in Robinhood for a trade at least? Probably 65, which is not too far from here. But more importantly, I think I'd be really interested in Robinhood if we got down to the 200 EMA on the weeklies, and that would be about 54. So, it's a long way from 75 to 54. That's another 20 points. That's another 30%. We'll see. But then you have to be patient with these. You don't have to chase any of this. There's many other stocks. Although this earnings cycle, a lot of stocks are getting pretty much, either they're zooming or they're getting hammered. And what I'm noticing is that all the stocks with high PEs, high price to sales ratios, and all these other metrics, even the earnings are good. They're getting sold off, such as Reddit. If you look at Reddit, look at that, right? The stock is just go to 1 year, 1 day, just getting hammered, right? And earnings were good, actually. It came out a couple of days ago. Estimates were 95. They beat $1.24, a 30% beat. Still, stock got hammered. So another one is today's Spotify. Same thing. Actually, it turned around now, but it was earnings were decent actually. But then look how much the stock has sold off already. 750 down to 400, right? And my goal for you guys to make you understand is that when the stock's going sideways, earnings come out, stock pops, it has to continue. If it's getting sold on good news, it's under distribution. And You know, well, that was Hoods, and another one is Palantir. You know, it's going to go make a lower low. All these stocks are under their 200-day moving averages, first of all, which is very important to me. That's definitely a trend change. You know, short term, for sure, intermediate, potentially. Long term, still an uptrend. But Palantir, as expensive as it is, yeah, earnings were great. But, okay, nobody cared. Stock is being sold. You know, there are a lot of stocks like that that are just getting hammered, especially in the software world. For example, Salesforce. Look at these stocks, right? They're just absolutely getting cut in half. Another one is Adobe. You know, it seems like AI actually is hurting. Look at these downtrends, right? AI is hurting these stocks more than anything else. These legacy software companies. Another one is ServiceNow. I mean, look at these downtrends, right? I mean, 200. They all got cut in half or more. And then a lot of people go, well, it's cheap now. Well, no, let the market tell you when the stock is cheap, right? When the stock is cheap, market will tell you. Another one is HIMS. You know, people, it's down to what now? 17? Exactly. Look at that thing. I mean, why catch a falling knife? I don't understand. And the funny thing is, you know, all this news that came out on HIMS was nowhere to be seen, but the stock was already selling off. So the market knows. Listen to the market. My suggestion to all of you who trade, listen to the market. Market's telling you something. And you don't have to believe it. You can have your own opinion, but you're going to get hammered. You're going to hold the bag for a long, long, long time. And, you know, there are many stocks that are just getting absolutely hammered. And there are many stocks that are making 52-week highs. The simplest group would be airline group, for example. I mean, you know, Delta Airlines, okay? Southwest Airlines. Look at these charts. Look at the difference between Adobe. You know, so this is rotation. Money is rotating. You got to understand that. Look at the difference in, you know, Microsoft and some of these stocks. Yes, they're not in the same groups, but why not deal with these than deal with stocks that are continuously making 52-week lows? Another one is Walmart, believe it or not. Look at that, right? Look at the difference between those charts. And another one is J&J. You know, consumer cyclicals and all those stocks are just keep making 52-week high after 52-week high. Well, that's your trend right there, right? You know, catch the middle and make some money with it. Yes, again, I'm saying this, you know, you're going to say, Serge, it's not that simple. I understand. But then at least understand the concept of trends. You know, when you're dealing with a downtrend, it's really painful. You know, have your stock go down every single day. You know, it takes a lot of mental energy out of you and definitely money out of your pocket. So, anyway, if you don't have any questions about different stocks, just post them. You know, that's what I'm just trying to make my crowd understand, that, you know, whoever you listen to, and if they're stuck in 5 different stocks, they're going to keep mentioning the same stocks. I'm like, be careful who you're listening to. For example, space stocks were very strong. ASTS, it's in a topping phase now. Same thing with Rocket Lab. Same thing with Planet Labs. You know, they're already rolling over. They're already selling off. And if you guys can remember some of my live streams when quantum computing was going crazy and I was shorting some of these things, and look at Rigetti, 58 high, we're down to 15. I mean, you know, you can hold the bag if you want, but then there's a growth phase, right? I mean, stock went from 16 to 58 in a very short period of time. Well, when fundamentals are not there, the stocks are going to do this, right? None of them had any fundamentals. And then, sure enough, Wall Street got a hold of it, and then they get hammered. And now, same thing is happening on crypto, okay? It is IBIT. IBIT is the eShares Bitcoin ETF. It's the iShares is the largest one. Look at that. I mean, if that's not a downtrend, and then people get surprised that strategy is going down. Well, of course it's going to go down. I mean, look at that downtrend, 457 down to 125. It almost broke 100 a couple of days ago. Same thing is going to happen to Ethereum. Here's Ethereum's iShares ETF. Look at that downtrend. I mean, what do you guys expect? And then they go, oh, BMNR. I'm like, BMNR is not going to go anywhere. And it's not Tom Lee's fault, by the way. I mean, Tom Lee says shit, and he's another human being. You know, Tom Lee's not God. Nobody knows, folks. No one knows what's going to happen to anything the next day. You can draw all the lines, all the squigglies on your charts and do this and do that. Nobody knows, but the market knows. Market's telling you something. And if you bought BMNR at 70 and you wrote it down to, I don't know, today, what is it, 19? It's your problem. Why is that? It's been in a downtrend forever. You can draw all the squigglies you want. It's not going to work for you. As long as you understand that the market's telling you a story, right? And all the other uptrends that are happening, right? It happened in gold, it happened in silver. Just the trend is your friend. Just go with the trend. If something is making lower lows, lower highs, I'm not sure if it's smart to get involved with any of these. And then, so, you know, I mean, again, I'm not trying to simplify the game. It's hard enough as it is. But then, you know, a lot of the basic metals are doing well. For example, Alcoa. I'd rather deal with a chart like that or with a company like that or Freeport McMoran, the largest copper producer. Look at these uptrends, right? Finding. These are not hard to find. You can set scanners and find them. I'd rather deal with that than deal with Hood. Now, it's in the middle of nowhere. I don't know. Is it cheap here? I don't think it is. But we had a Hood position, actually. We made really good money with ROBN. Luckily, we all got with our asses yesterday. But my goal is to make sure folks understand that, you know, even in the technology group, even in the same group, for example, okay, this is the best example probably, FedEx, right? FedEx has been making higher highs, higher lows for a long time now, since last April, right? Conversely, same business, identical business, right? UPS. I'm long UPS in my long-term port at 96, FYI, full disclosure. Now it's getting going, okay? But UPS, if you have been in UPS for the last 3 years, look at this thing. Look at this. 197 down to 82. While FedEx, it goes down to management, right? FedEx, look at that. Look at the difference. So same identical business. There's a time to step on gas and there's a time to back off. And a lot of people step on gas when stocks are going down. No, my trading philosophy is buy high, sell higher. And my investing strategy is buy low, sell high. Because on investments, I'm trying to hold it for a year or two. But then even on an investment, if something is rolling over and it's not working for you, you need to take your L and move on. So, you know, again, you know, a lot of this is like may sound like lecturing, but trust me, folks, after 30 years, I have learned valuable lessons of when people go, yeah, this is as low as it can go. Like a lot of people are saying that about PayPal now. I'm like, why? Look at that disaster. Why couldn't PayPal go to 20? I'm not sure, right? Will it? I don't know. But I wouldn't look at PayPal with your money. Because if you look at PayPal over the last 3 years, PayPal topped at 95 and literally December of 2024, and we're down to 40. And then now a lot of people are going to say, well, Serge, yeah, it's down like 60%. Don't you think it's a good investment? No, not really. You know, every dead dog has its day, but then it's been in this massive, in its own bear market while the market's making all-time highs. Think of opportunity cost that you're losing, by the way. While you're suffering with this, there's many stocks that are doing the other thing, right? Which is in their growth phase. Obviously, the price is telling you the story, right? Something is wrong with the company. I've never seen a chart that goes up with bad news. I'm talking consistently from the lower left to the upper right. And I've never seen a stock that goes from the upper left to the lower right with good news. Obviously, there's no good news. Earnings came out, it got hammered another 20%. And if you look at PayPal long term, okay, look at PayPal. Why couldn't it go to, I don't know, I think 35, 25, an all time, right? 30, it could. I mean, 40 to 30 is another 25%. I don't want to deal with it. Even if there's a chance that it could go higher, I don't want to deal with it. Because now my money is tied up. I'm not the Federal Reserve. I don't have unlimited funds. I want to participate and make money. I don't want to lose money first. I don't want to lose 50% first to make 50% 3 years from now. That doesn't work. Whoever says that is a fool. And if you're following those types of fools, you're not going to have a good time. So here's PayPal, right? $310 high. And that's July 2022. Okay, 4 years later, we're at 40. Literally, stock is down 85%. What has happened what has happened to SPY last, since the same time? Let's look at that. This is the opportunity cost. If you're in an index fund, as opposed to fucking around with PayPal or Oracle or things like that, so July of 2022, okay? Let's see what the SPY has done since July of 2022, okay? There you go, same date. July, October, April, July, right here. SPY 434, today we're at 692, 700, 70%. While PayPal is down 85%, SPY is up 70%. Same duration. Look at the opportunity cost you're losing, right? So when people go like, oh yeah, it's cheap, I'm like, okay, it's going to stay cheap for a while, for a long time probably. It's been getting cheaper. That's getting closer to zero on that part. Yeah, I'll give you that. But I don't want to mess with it. I don't have unlimited amount of money to just go, okay, I'll go down 50% and then I go back up 50%. And so what? That's what is that? That's investing? That's trading? No. But then some people think it is. I'm like, okay, cool. Whatever floats your boat, man. It's your money. I'm just trying to make you guys stop from making mistakes. That's all there is to it. That's all I can do. If I can stop you from blowing account after account, I did my job. So, that's where things are at. And it's, so SPY just keeps just getting stuck at, close to all-time highs. While there are stocks that are, SPY is probably, let's see, it's the same price as it was literally last October. It hasn't done anything. It's just going like grinding. The reason for that is because the MAG 10 is not participating in rallying. In fact, they're all rolled over. So at some point, if the rest are sold off, that's the other thing, by the way. I see a lot of people saying, oh, I'm down 30% this year. And I'm like, yeah, the market's only down 1% from its all-time high. If your account's down 30%, if the market rolls over, goes down 10%, your account's going to be down 70%, 60%. Because whatever you're holding is going to not outperform when the market's going down. General market direction is very, 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 very important, right? But then there are stocks that buck the trend. If it's a downtrend, they buck the trend. And if it's an uptrend, they buck the trend. So, for example, markets all-time highs, PayPal's bucking the trend, HIM's bucking the trend, Hood's bucking the trend, Palantir's bucking the trend. Okay, well, why do you have to be in those stocks? Aren't there other stocks? Aren't there other stocks like I showed? Dozens, hundreds, literally. Right? I'll just go put up a couple more and then, I'll say goodbye, have a cup of coffee. I'm just looking at my watch list, 52-week watch list. Look at ADI, analog devices, right? Micron, SanDisk, right? A little pullbacks and continue uptrending, right? I'm just kind of not understanding the haste of people getting stuck with the same damn names, right? Okay. There's so many, so many. Core. Okay, there you go. I'm just pleading with you all that don't listen to these furus. They're going to take you to the broke house. I'm not telling you to listen to me. It's your money. You can do whatever the heck you want with it. And again, none of this is trading financial investment advice, but You know, my goal is just to make you guys understand that there is a different way of doing stuff. And, have an open mind, it'll keep you out of trouble, I assure you. But then, again, it's your money. Okay, for example, healthcare business, right? Cardinal Health. Okay, looks pretty nice to me. Or United Health. I mean, let's see, sorry, United Health. Look at the difference. Or Molina Health. Look at that. What is that? Just made a 52-week low while the market's at an all-time high. Versus Cardinal Health. Both healthcare companies. Why is one making 52-week high and the other two are making 52-week lows? Well, that's what you guys have to figure out. And that I can help you with. Or you got to join my members group and then maybe you get some ideas out of it. There are a lot of big moves today, like a lot of stocks that are just kind of rolling over, like CWK. I should take that off my list, honestly. It was on my 52-week high list waiting for a move. It didn't happen. Mattel, same thing. Big move down. Look at that gap down. Nope. I took that off the list. ST, Sensata Technologies, I was waiting for a breakout there. It looks like it's about to happen. So maybe we'll just attach ourselves to that trade. I mean, there's so many stocks. There's 150 stocks on my watch list, and there's that are making 52-week highs or near 52-week highs. Corning Glassware, GIW. Look at that. Why don't you deal with that? Deal with that, then the other garbage. And people go, Hood. Oh, no, what about Hood? Okay, there's a time for Hood. Let's just wait. Ooh, one of my 52-week high ones are just cranking down. Carmen Holdings. I bet you this is a high PE stock. Sure enough, 10 cents earnings, 10 cents estimates, 40 cents, stock got up to 121. When that happens, yeah, it's definitely being sold. We'll give that a shot at 70 maybe. In the 200 EMA. 200 EMA is pretty decent support for a lot of these stocks, and the fact that Palantir, Hood, all these others, PayPal, all these other ones are under 200 EMA, it should be an indicator for you guys. Let's see, KTOS is another one. Yeah, that's pulling back. 134 high down to 86. 200 EMA is about 75. Let's see what the earnings look like on that one. There you go. Again, very high PE stock. 8-cent earnings, 14 actual. Yeah, beating earnings by 100%. But it's not enough growth. So all these types of stocks with very high PE multiples are getting shot. And that's been the trend, and it looks like that's going to continue to be the trend. And the companies with decent earnings, like Walmart, still expensive, by the way, but at least it has earnings, right? There was another one of my favorites is actually getting shot, Lemonade. That's coming down to the 200 EMA. I think we can have a play there, about 61, 62. Again, but earnings on Lemonade are due shortly, and estimates are 71-cent loss, and then they came with 51-cent loss. Actually, the company's losing money, right? So at some point, fundamentals matter, folks. You can't ignore it, right? And I'm sure for one not to ignore it. I'm not going to ignore what the market's telling me. When the market's selling off a stock, there's a reason for it. There's a huge power behind that sell-off. And I'm not the one that's going to try to get in front of it. I'll take my spots. I'll pick my spots here and there, but no, there's a firm, right? That's breaking down. Earnings came out. 28 estimate, 37 actual, beat by 30%, still going down, right? And then this all happened, by the way. Look at the way the stock is reacting to last earnings report, which that's when it kind of started rolling over, selling off, and the previous to earnings reports, right? Previous to earnings reports, stock is $100 a share. We're down to 55. Earnings estimates were 10. They came with 20. Again, though, even if they earn 80 cents this year, stock is 55. It's expensive. So all these high PE stocks are getting repriced. At some point, they'll stop going down, and then at some point, maybe you guys will take a look at it. But, and what else? Let's see if I get a couple other names. Schwab and Interactive Brokers is also getting hit with Robinhood. That's a big move for Schwab, 107 to 95. That's getting down to the 200 EMA. I may be interested in that one. IBKR is Interactive Brokers. I wonder if that's selling off. No, see, that's not selling off. Interesting. Big move on SOLS today. It broke out. See, some of these just continue doing what they do, which is after earnings. Yeah, I don't like playing around earnings. Another one was Figma. That came public at 40.50, I think. Look at that disaster. It went up to 142. Again, very high PE stock, right? Earnings are expected. They're going to lose $1.56. They actually came with a 10-cent profit. The next earnings report is shortly coming up, February 18th. Plus the lockup expired. All the insiders are selling, obviously. So, these types of things you guys got to pay attention to. And another good chart is SYNA Synoptics. It's just kind of consolidating before it goes higher. Earnings, let's see how good the earnings were. There you go, 34-cent estimate, $1.21. Whoa, I'm sure there's some gain in there. I don't think it's clean. Last time, no, 28-cent estimate, $1. Wow. 34-cent estimate, $1. I think that probably is a clean number. Now, here's a stock that's just growing, beating estimates by 300%. The stock's still not going up, right? But now it's going to keep going sideways until so this is going to be, if they keep earning this kind of money, I don't know what the estimates are on SYNA, but it'd probably be, $3 a share. Okay, 30 PE. Is it expensive for a stock that's growing that fast? No. Same thing with Hood. It's supposed to earn $2 a share, right? Okay, well, at 75, still 37p, and the growth is about 15 to 18%. Why should it sell 2x its growth rate? Is it worth it? No, I don't think it is. So that's why stocks are selling off. You guys have to understand some fundamentals, actually. You can't just continuously draw squiggly lines on stuff. Momentum is a powerful thing, folks. Momentum up, momentum down. It's very, 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 very powerful. Don't get in front of the momentum when things are going up. Try to short things, and don't get in front of the momentum when things are going down. It is a tough game to play that way. It's a tough game. Yeah, this came down, bounced standard arrow. Let's see the earnings on this thing. 19 cents, 20 cents. Yeah, that's why the stock's selling off. I mean, again, pretty high PE. 22 actually, about 80-cent earnings this year. $28. I'll go through this list at least twice, 3 times a week, and remove some and add some. Constantly working on it. So anyway, that's where we are. That's where we are. So I'll go to the front, answer some questions, and then there AS. Okay. Yeah, that one, massive breakdown on that thing. Massive. And it looked good until the earnings came out. But then again, it's like super expensive, right? I mean, if you look at the fundamentals of that stock, yeah, it's just getting hammered today. It almost looked like it broke out of this, just this trading range. Now it's retesting the low end, and I mean, 22 earnings, 49 actuals. Okay, but stock is 146, and yesterday's earnings were 30-cent estimate, beat by 100% almost, 58-cent actual. But let's say this year they're going to earn $2. Well, stock is 145, 75 PE. It's expensive, right? You're going to say, well, Sergio was 262. I know, but this looks like a hood situation, right? Stock companies growing, companies doing great. You know, it's not because it's bad, but it's because it's expensive. You know, everything with high PE, high valuation is getting repriced. That I can see, and that's what the reason for this is. But this stock will not tank too much more. It'll probably get down to 100, let's say. Once it gets to 100, and then earnings continue growing, you know, it'll have its next growth phase, right? But at the moment, all these stocks, all these high PE stocks, high flyers are just getting repriced. And once you understand that, you can stay out of trouble. So that's it. No more questions. I'm going to end. I'm going to go have a cup of coffee, finish the day. It's a pretty flat day. I'm not doing much. Holding what I have and survive this cycle, and then, you know, keep trading. That's it. All right. Join me Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. And if you're interested, put a thumbs up. It's free. And also, if you want to join the Telegram chat group, click join, send me an email, sergio@sergioavadian.com. I'll send you the link because today we're doing our members live. As opposed to Thursday, we're doing our members live today at 5 p.m. Pacific. So you have time to join that one as well. So have a great day. Stay healthy. And may all your longs skyrocket and may all your shorts tank.